I'm going to be honest, the one thing I'm concerned about with Liontown, the share price. I've been long, I've been short.
I don't want to look in the rear vision mirror. To me, it's about looking forward and what opportunity investors could have in investing in Liontown, right? And, you know, I look at us and think, well, we've got a great asset in Kathleen Valley. That'll be the foundation. You know, we're going to grow. So if we were producing 700,000 tonne of con, what's our market cap should be? Well, if I look at some of my competitors who produce 850, they're at 16 billion. I'll let you do the maths.
You answered my last question. I'm like, why would I buy you instead of PLS?
Well,
you're saying you're cheaper.
32? Would they be 32? I think we're closer to... Anyway, I'll let you go.
This is general advice and my opinions only. CFDs are high risk. Past performance isn't reliable. I may be long or short CFDs and stocks mentioned. Content may contain language that offends some viewers. LEVRD operates as corporate authorised representative 00131 8377 under AFSL 548573. You can find our financial services guide via the LEVRD website link in the show notes. Righto, Tony O. Mr. Liontown, I'll tell you what, the journey you've been on from the start of being offered money by everyone, then seeing a lithium price crash, and then going bananas in January this year is Liontown out of the sin bin and flying.
Well, you're absolutely right, Matt. It's been one hell of a journey. And, you know, we had to fund, build, which we did, and develop and put into production on schedule, which we did again. And then, you know, ramping up the plant in a market that was collapsing in front of us. And in the meantime, around us, we had takeovers, failed funding options. And, you know, if there's ever a definition around resilience, I think this company has it in spades. And one of the things that quite often is understated is you try ramping up a plant and growing a business, but at the same time trying to get costs out because the market around you has collapsed, and we managed to juggle both, which again is a testament to the team.
Yeah, very much so, mate. Look, I'm going to be honest. The one thing I'm concerned about with Liontown, the share price, because I'm a punter. And that's what I wanted to, I thought before I come back in. Look, mate, full disclosure, I've been long, I've been short, and I'm on a trading ban during the war at the moment because it's too catastrophic. And I wanted to get into the weeds about where Liontown and lithium is at once things settle down. Because as I said, the start of this year, and I wanted to talk, I can go and talk to fundies and analysts and everything. I'd rather talk to the people that actually sell the stuff, like yourself.
Yeah.
Start of the year, mate, was there any leading indicators to this price spike? Did you have an inkling, or it had been building up for a while?
That's a good question. Actually, let's start end of October last year. And the reason I want to take you back there is a group of us, me and some of my team, a lot of them which are deep technical, did a visit to China. I said, let's go and all see these lepidolites. Let's go and witness it ourselves, because with all due respect to the analyst community and the fund management, you know, we will get under the bonnet technically and trying to understand their cost structures. Right? So when we visited, all we kept getting told was, when are you growing? When are you expanding? And when we visited these lepidolite mines who had just been closed, we could see why they were cost effective, because they were actually not lepidolite mines. They were actually kaolin and clay mines that had lithium byproducts. And it was free dig. They were just using a dozer to push the material into the truck, right? So no blasting, and then they build a lepidolite refinery, 10 k's down the road. So they were producing a lepidolite con of 2.5%, transporting it 10 k's into a refinery. So we started to understand why lepidolites were making money, or they were at least being economic, given how lower grade they were. Then we looked at some of the spodumene refineries and their sheds were empty. So we said, hang on, I thought there's an oversupply. Why are your sheds open? Oh, empty. Well, there's a this and there's a that. But can we talk to you about expansion? And I said, well, why do you want to talk to me about expansion? Oh, we're a bit concerned about spodumene supply into the future. Well, why is that? I thought it was coming out of Africa. Oh, Africa's got complications. So we came back to Perth and we said, it's on.
Well, you weren't wrong. You were 2 months off.
So we said, let's dust off our 4 million tonne expansion. Let's see where that stands. Right? And the rest, here we are today.
Yeah, I want to get into that 4 million tonne expansion, but and the thing that got everyone, the statistical thing that was supposed to happen was Chinese New Year, lithium prices come off because they've done their destocking before it, but it was an absolute opposite of the start of the year, and it just...
Well, there's a couple of things, Matty. There's a couple of things. Cattle's mine. It's coming back. It's coming back in October. Then it was coming back in December. Every time the lithium price looked like it was making headway, cattle would announce, or the rumours would hit the market by the traders and the shorters around, it's potentially coming back, right? Then it was going to come back after Chinese New Year, right? And it was all about royalties and taxes. Well, all of a sudden now, it's about tailings dam and moving a river. Well, that ain't going to happen in a couple of weeks, mate. So I'm pretty confident that there's some more water under the bridge on that particular restart. So when you look at some of the deals that have been done in recent times by players like Canmax that are very closely aligned with CATL, giving companies like Pilbara $1,000 floor, that tells me that that ain't price ain't going below 1,000 anytime soon.
Do you think 2,400's too high at the moment for the market, or you're comfortable in stability on that currently?
Well, speaking from a Liontown perspective, we're very, very comfortable at, well, clearly at 2.5, but at 2,000, we'd be happy as well. Even lower than that, right? Or not happy at 600 or 800, right? And neither with 30% of the cost curve. But at these prices we're making, and you'll see when we put out our quarterly, that we're happy.
It's a significant. Those quarterlies are going to look very interesting side by side because the price change has just been phenomenal. Your sales price, I mean. So the battery, from a seller's perspective, the thesis going around. Well, it's not a thesis; it's true about the battery storage demand. Is your customer changing with that, or is it all going to the same place? Still, has there been different people come into the market wanting the lithium? Who's like, it all started with, Ford and et cetera with you guys, but is your customer changing with different types of batteries?
Not immediately, but let me put this in a little bit of context. When we approved Kathleen Valley, there was only one demand vector, EVs. It was all about EVs. So every time EV data would come out, right, if it got a bit of a sniffle, the market would panic. Right? Now I'm looking into a demand profile that has EVs, stationary batteries going up strong, and depending on where you look at it, future humanoids, right? It's starting to diversify, which is a de-risk for someone like me who wants to expand, right? There's more drivers of demand. Now let's talk about stationary batteries. I've just come back from the States. And let's be honest, the States were never big believers in EVs. Right? The States were the EV demand coming from the States was policy driven, was an artificial construct, IRA, tax subsidies. As soon as the President Trump came in, all that sort of fell away. What they are believers on, and what they do show a lot of conviction around, is stationary batteries. Why? Because they underpin the whole data center thematic and the AI generation, right? And I saw that firsthand. We visited some funds in Texas. All they wanted to talk about was stationary storage. Why? Because Texas will become the data center capital of the US, taking over from Virginia. Why? Because the Texans have gone in hard on stationary storage. Their grid availability has improved amazingly, and they're putting in a lot of wind and renewables. That is a state that is driven by gas and oil.
And is most of that for backup? Is that the big thing is because they need the...
Well, think about it this way.
Yeah.
What the data centers require is something like 99.99% uptime. It's some incredible amount, because you don't want your OneDrive disappearing. Right? So, given that level of reliability, what they have is backup power in case the grid goes down, and that's typically gensets, either gas or diesel or that like. But they can't rely on one level of backup. They have a second level of backup, which is batteries, right? Which gives them about a 4 to 6 hour uptime. Okay? Now, all these places have got all this battery storage as second levels of redundancy. So then they say, well, we've got all this storage. Let's go to the grid, the power producers, and say to them, actually, we can lower your capital costs, because those 3 or 4 days of the year where the temperature's 45 and you have peak power, instead of building infrastructure to deliver for those 3 or 4 days, don't. Because we'll give you some storage from our batteries. So they cut a deal. And what it does is it improves the utilization of the grid, because there's power more often on the existing grid. And that's the secret sauce.
Very interesting. Mate, we know how bankers and everything, like best mates to enemies back to best mates, I'd assume. Let's go through last year. Like, we know you snuck an equity raise in. And look, this is from my perspective, and you can either agree or confirm. Like, you looked at operation in ramp up, a lot of debt. You got the equity raise in, the debt stayed there, and everyone's saying, God, this is tough going at the moment. Lithium prices were down, and then at a click of the fingers this year, the lithium price recovers. You converted the LG con note. How have the discussions and the tone with all the bankers, the analysts, and the investors changed in such a short period? I assume the tone is very, very different.
Yes, it is. Clearly, the numbers now speak for themselves. If we look at our balance sheet, we're net cash, right? We're net cash. We've got a one debt facility, which is Ford, which is very low covenant. We don't have to pay it out until 2030, right? And it's got at an interest rate that I don't think you've got a home loan that cheap, right? And so it's very, very attractive debt. So from a capital structure point of view, we've got optionality and we've got firepower now, right? And, we put together that convertible note. And at the time, our share price was 65 cents and we had a strike price of $1.80. Right? And people said, it'll never convert, it will never convert. Well, now it's converted and people said, the strike price was too low.
Yeah, there's an example.
Matty, if I'm not on medication after all of this, I'm even surprised.
Mate, right? I'm just assuming you are. Because I would be. I wouldn't be sitting there, I can tell you that. Mate, the operation, I want to get into the operation, I want to talk expansion, and I want to talk...
Mate, I want to talk to you about the underground.
And inorganic expansion as well, if that may be a thing. But the operation, so it obviously had to... the 4 million tonne was there. The operation had to slow down due to the prices. We're now... It's ramping back. It's been ramping up, but it's ramping back up, and that 3 to 4 million tonne numbers back on the cards. How are things going underground now that you're stoping? It's full underground feed, but considering you probably had to slow things down a bit, did you get far enough ahead that the operation is running smoothly? Decoupled production and development.
Yeah, good question. So let's break it down. We've got two main ore bodies, Mount Mann and Northwest Flats. When we pivoted the mine plan in November 24, we basically put Northwest Flats on care and maintenance. And we said, we're going to get all the tonnage out of Mount Mann. Why? Because Mount Mann on a development capital per tonne basis were far more efficient, right? It's a vertical ore body, so, limited development, you know how it rolls. So we went there, but there were certain parts of Mount Mann, which again, if we look at the tonnes we extract for the development meters we put in, it made no sense. So we went right past them. And we were aiming to go to the thicker parts of the ore body, where the stope sizes, our stope sizes are averaging 14,000 tonnes at the moment. They're going to move to an average of 40,000, the back end of this calendar year. And then there are some stopes that are 80 to 100,000 tonnes. So you can see with the larger stopes, we're going to get lower cost per tonne because the same fixed cost over more tonnes. Right? And the part that we left behind, so that is optionality that we can go to accelerate the fall.
So you're saying the decline's already there. The decline, you've gone past it, you just got to punch in. Yeah. So that's the first thing. Here's the other thing that we didn't have when we first spoke about it. We couldn't access Northwest Flats any other way than through the box cut. So we had this long decline to get to the ore body. Well, now we've got a benefit. We've finished mining from the open pit. We're punching a hole straight through the bottom of the open pit, right into the ore body. We're into ore pretty well straight away. Yeah.
So that's a benefit that we never had when we put 4 million tonne on the back burner, right?
I thought I'd give you the opportunity, and I've obviously said plenty of positives, plenty of negatives, but the one thing I've stood strong by, and I'm going to give you the opportunity to tell it to the world right now, because there is still the narrative going around that the questions about mining lithium underground still going around. Rocks are rocks in my world. I thought I'd give you the opportunity to address that now that you are mining lithium underground.
Yeah. Well, as you know, a lot of my competitors said that you couldn't mine lithium underground, and yet here they are planning to do so, right? So Wodgena's going underground, Mount Marian's going underground, Greenbushes are talking about going underground, Patriot or PMET is going underground, right? So it's fascinating how the world moves, right? Now, a couple of things. As you know, Matt, the mining method is agnostic to the commodity. Rocks are rocks, right? So when you speak to the miners, the burn cuts and my team, they say the ground conditions, Tony, are so good, right? We've got competent rock. It is hard, but that's just a wear rate issue, right? But in terms of ground and solid ground, and the drilling rates we're getting, it is excellent. You talk to your jumbo mates and what they say about Kathleen Valley. And you know what motivates a jumbo operator? It's all about productivity. Exactly. So what do they want? They got good ground condition. And the stuff, when it blasts, we're getting excellent fragmentation.
The expansion, mate, 4 million tonne. Yeah. And look, you could go to 6 million tonne if you wanted to. Your ore body is huge at Kathleen Valley. There's no denying that. 4 million tonne. What is one? I want to talk about potential funding. How, if you think, and we can assume 2,500 tonne SC6 spod price as a bit of an upside. Like, could it be funded with cash flows? What's your flexibility to get more debt? And are we going to look at things like a crusher underground, some conveyor belts, like to really optimise this operation? Because getting 4 million tonne out of an underground's a big job. You've got the windmills there, and you could utilise them for conveyors, I assume, to take diesel away. What's some of the initial scopes that you're thinking if you do go down this road?
Yeah, couple of things. Let's talk about the plant first. Again, what we've got now that we didn't have before is the ability to go into the plant and debottleneck where the constraint is and unlock capacity as we go. So the plan will be, we're not going to do go from 500,000 tonne of con to 700,000 in one bang, right? We're going to unlock capacity as we debottleneck, right? So the first thing we'll probably do is put a ball mill in. Then we'll put a couple of extra float cells in. And then what that does is it gives us three benefits. First one, it smooths out my CapEx into small chunks. And what that does is it helps me fund it from internal cash flow. It also unlocks concentrate as we go, which helps fund the CapEx because I'm getting cash flow. And the last advantage it gives me is it doesn't choke the market. I'm putting bite sizes into the market so it can digest it. I'm not going to put 1 million tonnes of con into the market in one hit or in bits and pieces in a ramp up. So that's how we're approaching it. So that's the plant. And the underground will ramp up accordingly. So as the plant gets a new level, the mine will be ahead of it, right? Through those two areas I spoke to you about. Now, underground crushers, conveyors. I've got one on my board who's very keen to me to look at that, Big Shane McLean. So we will look at that.
That'd be a good consulting job for him as well.
So,
shout out, Mac, a very good friend of mine, that bloke.
Yep, I know. That's why I mentioned it.
So you say, what is going to be the bottleneck in that scenario once it's, let's assume, full ramp up? Is it the mill or the mine to get 4 million tonne?
I think it'll still be the mine, but I don't want to be the mine long term. I always want the mine not to be the constraint, right? So, but because we're ramping up, we got to do it sort of in tandem.
Yeah. I'll ask this question very respectfully with the current.
Sorry, before you go.
Yeah.
Right now, we're sitting at we started stoping in April last year, and we've paste filling and all that sort of stuff, and we're already at 1.5 million tonne rate. Right?
Yeah. Now, I know your quarterly's coming up soon, so I'll ask this question accordingly. With everything that's going on in the Middle East at the moment, I guess, how are you addressing any potential risks of fuel supply? That's what's on the tip of everyone's tongue at the moment. What's in place?
Okay, well, first and foremost, as we've been saying for some time, we're 85% renewable power, right? So the 15% that we can't produce from renewables, it's gas, local gas from the Northwest Shelf, right? So from a power supply perspective, we're good, right? The second thing is, what diesel do we use on site? And it's really the trucks that Burncut use for hauling, right? And we don't have as many as an open pit because we don't have to move waste as much, right? So I think we've got 7 trucks. And then there's light vehicles. So really our diesel consumption isn't that great on site. So we're in good shape.
Yeah, yeah.
The second thing is, sorry, we transport the material from the site to the port of Gero. Cube do that. And the way I look at it is, if Cube runs out of diesel, the whole of Australia will stop. So I think we're fine.
Yeah, well, we've had an uptick today. So, like, God, the story's changed 3 times in the last 24 hours. So we won't. Yeah. No point even hypothesising, mate. The mill. Before I get on to the bigger end stuff, the mill. What'd you get? 63% recovery in the December quarter, acknowledging this has been ramp up, yeah, and yous have gone down the whole ore flotation route compared to other operations. Look, DFS said 78. You're talking of targeting 70. Talk about what are the limitations in getting to the 70? What have you learnt so far in that processing process, you'd say?
Yeah.
And what are the limitations to get into mid to high 70s?
It's making the underground the dominant feed. We've told the market the reason our recoveries are where they are is because of 2 reasons. One, open pit material is lower grade, better recovery, first. Secondly, we made a conscious decision when the world was turning to shit that we would process contact low-grade stockpiles because that mining cost was sunk and we were preserving cash. So these low-grade contact ore stockpiles, we have been processing them, and when they're high in impurities, it drags down your recovery. So it's been a deliberate strategy since November 24 to process those low-grade stocks and get them out of the way, and we'll do that by this financial year. They'll be gone, and then it'll be 100% underground ore, and whenever we've put in 100% underground ore, we've averaged over 70%, no problem.
Yeah, and so that's this
fourth quarter, back end of fourth quarter, we're 100% mill underground feed.
Interesting, right? We'll be keenly watching, mate.
Yeah.
Now, the talk, and I'm sure a bit's come from either side, Liontown are going international. The talks that they're looking to grow by acquisition. Brine or spod or both? What interests Liontown? Not saying what you've looked at, what talks have had, but I want to talk about both sides of the lithium story.
Yeah. Okay, first and foremost, Kathleen Valley is the jewel in the crown, so I want to expand to 4 million.
Yeah.
That is the most value accretive pathway for the shareholders, right? Well, once we get beyond that, we need to ensure that we continue to bring good growth options to the table because we want to be more than just a single asset company, right? We want to be able to diversify our revenue, right? Because it is a very cyclical business, right? So there's 2 elements to that, Matt. We've got to diversify by geography. Believe me, if there's another Kathleen Valley in Australia, I'd be onto it, right? And so would everyone else, right? But so we'll keep looking in Australia, and we'll look around Kathleen Valley to make sure that it's not a unicorn. So there's a bit of exploration work that we're going to kick off around a Kathleen Valley.
Which has never been, has that been done at all since you've had the asset? Like once the study started, nothing?
No.
Interesting. Yeah.
No, because I've got to negotiate with other players, right? And us miners don't work well together, unfortunately. So that's the first thing. The second thing is, where are the 2 other major regions? Canada's one's got some fantastic deposits. South America, Argentina, and Chile as the other, right? Now, there are good deposits in Africa, but I can't operate in Africa, right? So hard rock is our core competency, right? And we know how to do it well, and we'll continue to prosecute that. But if we believe demand is going where it is, the demand for lithium units, I cannot ignore a major source of lithium units, right? But I've got no experience in that area, so I'm not going to do it by myself. I'm going to build the understanding with a partner, right? But it's not a question of hard rock or brines. It could be more hard rock and brines with a partner.
Yeah.
But at this stage, I haven't made any decisions, right? So we'll just keep doing what we're doing. But I remember the 4 million is number one priority.
Yeah. Partner. Define partner for me. Are we talking downstream or are we talking in-country operator? What do you define as a partner?
It could be all of the above.
Yeah. And I guess where do you see the most value accretive? Like, and look, we're talking by the sounds, possibly years down the road if we're looking at this. But where do you see something early stage thing like a Q2 as more value accretive than like a PMET if you go on the spod route, or like, you know, because Rio's taken a big swing in the brine space with Arcadium. Like, do you want less risk with something more established, or you want something with value?
Again, we've got to take every opportunity on its merits. We're happy to look at early greenfields because we've got a real core competency in that area. We're happy to look at shovel ready. Again, we've got real competency in that area, being a recent developer. And we'll look at going concerns because it's immediate cash flow. So whatever makes sense, and the numbers in the end will determine the direction.
So with the market where it's at the moment, and I guess where, like, yeah, as you said, your company, like Liontown's sitting pretty healthy on the balance sheet now at these spot prices, like we're going to be making cash. Who's doing the door knocking? You guys, or are people coming to you a bit more now? You're in a good position?
Matty, I'm not going to give you that scoop. All right,
worth a try. It's like these. This is like these analyst calls. You get the same question 5 different ways, and by the end they're like, "Oh, I thought I'd give it a go."
It looks like I'm doing a psych test.
Lucky this ain't your first rodeo, mate. So, Buldania obviously doesn't move the needle too much, but we're seeing a lot of gold little spin outs at the moment. Does that take any of your attention at the moment, or is that?
Well, that's a very good question, Matt. So we finished open pit mining in December. I have a very good team that was working on that. Right?
Yeah,
a good mine manager. And he's got a great team underneath him. And I'm thinking to myself, I don't want to lose these skills. They're so hard to find. So I said to them, go and look at this Buldania. And it's not going to be a Kathleen Valley, but it could be a good swing producer. Come and look at it from an alternative perspective, a low-cost development opportunity. And that's what they're working on.
Interesting. Mate, last question. I reckon you could pick it. Have you spoke to Gina yet?
No, look, we have a very good relationship with the Hancock Group. I mean, we speak to them on a regular basis, especially when we release our quarterly.
Last time I spoke to you, you hadn't spoken to them at all. So it sounds like things have progressed. The relationship has progressed a little bit.
We speak to them on a regular basis, and it's pretty constructive. I don't meet with Mrs. Reinhardt. I meet with her management team, and so does Tim. And yeah, it's all good, very constructive.
Very good. What, from your perspective, mate? What's one thing that the market's got wrong about you that I might find interesting? Scuttlebutt going around. I thought I'd give you the opportunity.
Well, it always changes. You know, the narrative. It depends on what. You know, we were going broke was one, we couldn't mine underground was another. You know, on the going broke, our cash position never fell below 150 million, right? And we were good planners. We planned ahead. We knew where we had to go. We did scenario planning. We understood where if the price was this low, what do we have to do? We responded early. We pivoted the business. I mean, I'd like to think that the market recognises the capability of the team, right, and what we've been able to do. So that's one thing. But the other thing is, I don't want to look in the rear vision mirror. To me, it's about looking forward and what opportunity investors could have in investing in Liontown, right? And, I look at us and think, well, we've got a great asset in Kathleen Valley. That'll be the foundation. We're going to grow. So if we were producing 700,000 tonne of con, what's our market cap should be? Well, if I look at some of my competitors who produce 850, they're at 16 billion. I'll let you do the maths.
Yeah, it's my last question. I'm like, why would I buy you instead of PLS?
Well,
you're saying you're cheaper.
32? Would they be 32? I think we're closer to... Anyway, I'll let you go.
Very good, mate. Well, once I'm out of my trading ban, I may pop up on a CFD as a CFD holder. And for the record, my last position was in the long direction.
Right, okay.
Mate, Tony O, thanks heap for the time, mate. That was
Thank you, and good luck on your new enterprise.
Thanks, mate.
And you're welcome to site, Matt.
Yeah, no, I'd happily. You just let me know, mate.
You're not welcome in my office, but you're welcome on site.
I'll come up and check out that conveyor project with Mr. McClay, if you don't mind.
Yeah, for sure. All right,
good on you, mate. You have a lovely day.
Will do. Bye.